Hey folks, Rajesh Patel here with Red Acre Investments. Welcome to our Q2 2014 Biotech Earnings Preview. Q2 Biotech earnings kick off the week of July 21st with 5 of the top 10 names in the IBB reporting that week, another 3 names reporting the week after, and the final 2 names in the top 10 reporting on August 5th and 7th respectively. Now, remember the IBB is the iShares NASDAQ Biotechnology Exchange Traded Fund. So it's an ETF that you could buy and sell to express a view about the biotech sector in general, and it tracks the NASDAQ Biotechnology Index. Now, why do we focus on the top 10 names? Well, the top 10 names represent 57% of the market cap of the NASDAQ Biotechnology Index. So just those top 10 names capture over 50% of the biotech sector, and that's why they are super important. So let's look at where sell-side consensus is for the top 10 names in the IBB. For Gilead, it's $1.77 a share on $5.82 billion in revenue. Illumina, 51 cents a share on $427 million in revenue. Biogen IDEC, $2.82 a share in earnings, $2.15 billion on the top line. Celgene, 89 cents a share on $1.85 billion in revenue. Alexion, $1.07 a share on $510 million in revenue. Amgen, $2.07 a share on $4.91 billion in revenue. Vertex, a loss of 71 cents a share on $131.9 million in revenue. Endopharm, 88 cents a share on $644 million in revenue. Regeneron, $2.26 a share on $644.5 million in revenue. And Mylan, 77 cents a share on $1.88 billion in revenue. So that's where sell-side consensus is. We've based these on publicly available numbers, but it gives you a good idea of where the sell side is for the top 10 names in the IBB. Now, let's talk about a couple of the stocks in particular and about the sector in general. Remember, when Q1 earnings were reported at the end of April, beginning of May, we were going through a correction in the biotech sector. The market had dropped 20% from its February highs to its April lows. We were going through consolidation when Q1 earnings season came around. This meant that the biotech stocks were not priced for perfection when Q1 earnings rolled around. So if a couple of them had not so clean of a quarter, it kind of was okay because the stocks had already pulled back from their highs. This time around for Q2, the IBB is within 10% of its February highs. So the stocks are priced higher in general, and that means investor expectations are likely higher for all of these names to perform and to have good, clean Q2 reports. Now, in particular, there's going to be a lot of focus on Gilead, and of course Sovaldi is having the best drug launch in history, but there's some controversy about drug pricing. Right now, our opinion at Red Acre is that this is a lot of political grandstanding, both from Representative Waxman and Senators Grassley and Wyden, expressing a lot of concern over drug pricing, but Congress doesn't actually have a tool to directly regulate drug prices at the present time. We think that the reason that they're doing all of this political grandstanding is that Gilead is going to come out with their combination pill of Sovaldi plus Ladipravir in October, and all of this political maneuvering is basically to try to curb the eventual pricing of that combination therapy because Sovaldi's price is already set and there's not much that Congress can actually do about it. Investors are going to be looking at a couple of things with Sovaldi. First of all, what is the actual Sovaldi run rate? Now, the sell side is saying $2.5 billion in revenue. The sell side is wrong. The whisper numbers on the buy side are $3 to $3.5 billion for Sovaldi sales. Looking at just the IMS numbers for US scripts, you can get to about $3 billion for Sovaldi sales. So that means that the buy side is expecting somewhere around $500 million for ex-US sales of Sovaldi. Long story short, if Gilead comes out and says that they sold $3.5 billion of Sovaldi for Q2, that's pretty much what the buy side was expecting. If they come in below $3 billion, that's actually bad for the stock. And if they come in higher than $3.5 billion, which would be hard for them to do, that would be positive for the stock. The other thing that investors want to know is, what is management going to do with all this cash that they're generating? One thing we know that they have been doing is buying back their own stock. They have $5 billion in buybacks already authorized, and they have been actively buying their own stock in the open markets. But investors want to know, are they going to re-up that authorized buyback program, or are they going to start looking around for potential acquisitions? Now, this is a management team that successfully acquired Pharmasset for $11 billion, and it looks like within a couple of years, they will have recouped their investment and made it accretive for shareholders. So if they make some indications that they're looking for something else to buy, that might be viewed positively by investors, because it deals with the issue of what's going to happen with Gilead revenues after 2020 when some of their HIV drugs come off patent. That's where we are with Gilead. Let's also talk about Vertex Pharmaceuticals. Now, Vertex, nobody's expecting them to make money this year. However, for 2015, sell-side consensus is for 66 cents a share in earnings for the full year 2015. What we're seeing with Vertex is a company that's going from unprofitable to profitable, and it's a biotech growth story that no longer has a binary event hanging over it. The traffic and transport studies that reported in June, the two big phase 3 studies of Kalydeco in combination with VX-809, both showed benefit for cystic fibrosis patients. And the expectation now is that this combination will be filed and will receive FDA approval, and therefore next year Vertex will be able to treat up to 50% of the cystic fibrosis patients out there. This company is becoming a powerhouse in cystic fibrosis, and that's going to translate to the bottom line starting next year. Now, the stock may be fairly priced for the parts of the program that are already de-risked. That is, the combination of Kalydeco and VX-809 in the homozygous del(508) mutation population. But Vertex has ongoing trials of Kalydeco and VX-809 for the heterozygous population. That is, cystic fibrosis patients that only have one bad copy of the 508 gene. And those heterozygous studies will read out sometime towards the end of this year or the beginning of 2015. And when they do, that should have further upside for the stock if they are positive. So those are two names in particular that we're going to be paying attention to here at Red Acre come this quarter. Another name to pay attention to, although it's not part of the top 10, is BioMarin. Recall, BioMarin also had one of their drugs approved, and in their Q1 call, they guided that once they reach $1 billion in revenue for their new drug, they are going to become profitable. So that's another story of a biotech name that should be transitioning to profitability within the next year or so. So in general, right now, there's a lot of investor nervousness in the biotech sector, partly because of this concern over Sovaldi drug pricing, but more so because of Janet Yellen's recent comments. The Fed chairwoman, in notes to Congress, mentioned specifically the biotech sector as having valuations that are stretched on a forward price-to-earnings ratio basis compared to historical norms. Now, we can argue whether or not that analysis is correct, but at the end of the day, our view is that it doesn't matter whether you think the analysis is correct, because when the Fed chair speaks, the market in general listens. And therefore, this quarter, it is critically important for all of the biotech names, especially in the top 10, to perform really well in order for investors to maintain their confidence and enthusiasm for the sector in general. So that's our summary of Q2 earnings. If you enjoyed this video, feel free to share it with your friends. And if you're an active biotech investor or would like to become an active biotech investor, I invite you to check out Red Acre Premium. Our mission at Red Acre Premium is to help you become a better, smarter, more profitable biotech investor. And we do that by showing you exactly what we trade, how we trade, and why we trade the things we do. We're not interested in just giving you stock picks at Red Acre Premium. We're interested in making you a better biotech investor. Thanks for watching, and I'll see you in the next video.